Hi, everyone. We'll give it just a minute for the room to fill up as we're at the top of the hour. So we'll be starting in just about a minute. All right, I think we can go ahead and get started. So hi, everyone, and welcome to the second GRESB Real Estate Q&A session. We're excited to host this second session of the year. My name is Kevin Kirby, and I'm associate on the member relations team at GRESB. I've been with GRESB now for almost 2 years and just finished up my transition over from the real estate team. And I'll be the moderator for today, working closely with the rest of the real estate team. So firstly, we do want to thank you all for joining during the busiest time of the year for you. In terms of activity in the GRESB portal, we're seeing a lot, and we're hoping to see quite similar growth to last year's participation numbers. So yeah, I think in general, yeah, everyone's in good shape so far. So on the line today from GRESB, we have myself, Max Maywald, and Victor Fonseca, who are analysts on the real estate team. We have Izzy Groger, who's an intern on the real estate team. Charles Van Til is director. We have our events team, and also we have Steve Pringle, who is our director of member relations. And so with that, I think I can go ahead and share my screen to open up to the presentation. 1 second. All right, this should be up now. All right, so we'll go through a quick few reminders about the response check, what the reporting boundaries review process is, some of the new supporting materials we provide to you as participants, and then we'll move into the open Q&A session. And then lastly, a quick reminder of some of the other resources we have available to you. So as this is an open source or really open forum Q&A session, we do ask everyone to use the Q&A function at the bottom of the Zoom. So chat is something, if you want to message us directly, but if you are asking questions, please go ahead and put them in the Q&A box. And as we move through the next few slides, which will take 5-10 minutes, you can go ahead and begin to queue up the questions and submit them to us so we can begin to allocate those to the relevant team members. So please, fill out that questions as we move through at any point. And hold on, yeah, and here also, so we've had plenty of questions submitted in advance. I think we have between like 10 and 15 questions that we'll cover. Some of these questions were a bit specific to, a specific reporting entity or a bit too technical to get into on the call today. And we have your contact information, so we'll be reaching out very shortly with additional information and to get back to your queries. And with that, I will turn it over to Izzy to introduce the response check. Izzy, take it away.
Thank you, Kevin. So hi, everyone. My name is Izzy. I might have interacted with you through our help desk platform. So I'm in charge for the real estate team. So today I will talk to you about the response check, which is a high-level check of your assessment response prior to the final submission. You can request a response check through our portal by simply selecting your reporting entity and then navigating to the shop. So before I start, I just want to remind everyone that we have 2 different deadlines. So we have the assessment submission deadline, which is the 1st of July, as you will probably know. And then we have the response check deadline, which is June 1st. And the response check is carried out by our third-party validation team, SRI, and features a careful review of your assessment responses, followed by a 1-hour discussion call. Please note that the response check does not exclude you from any element of the validation process, nor does it guarantee you a better GRESB score. So I would now like to run you quickly through the process to schedule a response check. So as mentioned before, you can request a response check directly through our portal at any time after you start the assessment. Once you've paid for the response check, you will then receive a link where you can schedule a call with our third-party validation team. Please make sure that your assessment is completed at least a week prior to your call, so SRI has enough time to actually go through all your answers. After your call with SRI, you will then receive a feedback report, which you then can use to review and revise your assessment responses. There's also the option to not have the call and only receive the feedback report. We strongly encourage you all to schedule a response check and a call as early as possible, as there is only a fixed number of available spots. And last but not least, the response check calls take place between May 1st and June 24th. So you still have almost a week to finish your assessment before you finally submit it on July 1st. So all this information can also be found on our website under gresb.com/response-check. And yeah, I'd now like to move on to the benefits. So the benefits of a response check are mainly because, so why would you book a response check? So it helps you to reduce errors that may adversely impact your assessment results. And it also identifies inconsistent responses and incorrect answer formats. A response check also ensures that your submission is as complete as possible. And lastly, provides you the opportunity to ask for additional guidance and clarification on the GRESB assessment indicators. The response check scope includes all scored indicators for the real estate side, and includes all three components. So management, performance, and development. It also includes a review of entity and reporting characteristics. Please note that the asset level reporting for the real estate performance component is not included in the response check, as reporting here is subject to a comprehensive set of automatic validation checks, such as logic and consistency checks, which are embedded in the asset portal. And yeah, just as a reminder, you can find all this information also on our website. And if you have any further questions, please feel free to contact us through our contact form. That's it from my side. And I now hand over to you, Max.
Thanks, Eddie. And also good afternoon from my side. As you all know, that at GRESB, we have like a hard requirement when it comes to our reporting scope, which means that you all need to report on your whole portfolio. And this includes all landlord and tenant controlled areas, but also joint ventures, meaning with joint ventures means all assets or also the other funds that you have a stake in it. And for this, we have a threshold of at least 25%. So meaning when you have an entity stake or an equity stake, sorry, in a certain asset or another fund of more than 25%, you will have to include this into the reporting scope of GRESB. And then you have like two ways how to report this though. Either you report the full GAV of this asset or the fund, or you actually only provide us with the GAV equivalent to your share in this asset. However, one very important thing is that you always need to report the full asset floor area and the full performance data. So there's like no equity share adjustment of the performance data for joint ventures in here. And actually to check these boundaries that we impose on you is that we have a reporting boundaries review right now. And here we approximately select up to 5% of your submissions based on certain criteria, meaning we look at listed, non-listed entities, but also, and then like look at whether you had a year-on-year increase or decrease in your overall GAV, in your asset count, or also like flow area over the last years. And what we then do is, especially like first to check on the overall asset count and also the percentage of GAV per property type. Because like both of these are very important, or especially the percentage of GAV per property type is very important for our peer group allocation, and therefore has hard or very strong implications on your scoring and benchmarking afterwards. And how we do this is actually we use either the reporting scope evidence template, which you can find in Appendix 2C, but also your annual reports and other upload documents, and also public sources that we might find online from your entity. If you're actually then not complying with our requirements, we may actually request you to adjust your reporting scope afterwards to actually comply with our requirements in the end before your final submission. Looking now at the timeline of this. Yep. On June 15th, our third-party validation team of SRI will actually email all selected entities. At this point in time, you actually don't need to do anything yet. This is really just a reminder that you were selected. And then on July 1st, the SII team will actually start with the boundaries review. Mean they will then go through all the documents, reconcile your asset count, percentage of GAV, and then afterwards on July 10th, we will email every single selected entity and either say, great, you actually complied with our reporting boundaries, or if you actually did not comply, we will then give you 5 working days to provide us either with more information or actually adjust your reporting scope by including all assets that are needed to be included. And this could be then like a little bit of an iterative process before July 31st, when actually then the reporting boundaries review is concluded and the final submission needs to be done. Yeah, this was from my side. And now over to Victor for new materials that we have this year.
Thank you, Max. Good morning, good afternoon. I am Victor, analyst in the real estate team, and now present to you the new supporting materials that we have released this year on the top of the core guidance materials that we release annually. So this year we have like the aggregation rules handbook and the asset portal validation rules. It is important to note that even though our assessment remained stable in 2021, GRESB has worked to improve our documentation to enhance the user experience of you when you are completing our assessment. So starting with the aggregation rules handbook, the intent of this document is to provide transparency to you when it comes to what happens to what operations we perform in the back end of the GRESB portal. We do usually get a lot of questions regarding how does the asset level data aggregate into property subtype level data, which we display in assessment portal and subsequently on the benchmark reports. So with that, GRESB has decided to disclose all the calculation steps in order to aggregate this raw data into metrics that we score in the real estate assessment. So this document covers data coverage, like for like, and also intensities. We heavily incentivize you to have a look at this document as we are approaching the assessment deadline. So if you have any concerns or seeking any clarification when it comes to data aggregation, this is the document for you. The other one is the asset portal validation rules. This document consists of a validation flowchart that better illustrate the relationship between different data fields that we have in our GRESB asset portal. So the GRESB asset portal have a series of logical checks that guide participants to amend fields that they have reported incorrectly, if it was directly on the asset portal or if it was by an upload of the asset spreadsheet. So these logical checks follow the validation rules. And the intent of this document is to provide a high-level overview of these rules and how is the relationship between different fields that we require asset level information. So over to you, Kevin. You are mute, Kevin.
Yeah, so I was going to say that these are, they're new resources that Victor's talked about, and specifically with the Aggregation Rules Handbook. Any data geeks out there will really enjoy picking apart very intense formulas that I can't even begin to understand. So yeah, take your time and reference these new documents that we've created for you. Okay, so I see a couple of questions that came in. So I'll still encourage many of those on the line to continue to submit questions. What we will do to begin with, though, is start with the questions that were submitted in advance. So I think we can go ahead and start then. The first question, so I will read this aloud and then pass it off to the respective member of our team. So how do we determine our portfolio predominant property type if we have an equal proportion of retail and office assets? We also have a separate portfolio of mixed-use developments. And before I pass this off to Victor, what this is referring to is, I believe it's RC4, RC5, which is the portfolio predominant property type that you actually select. So over to you, Victor.
Yes. So there are different ways for you to divide your portfolio, right? It can be in the number of assets, it can be floor area, or it can also be GAV allocated. We suggest to be consistent with our peer group allocation methodology and assign yourself a predominant property type according to the GAV allocated. Meaning that, like, if you have more than 75% of GAV allocated in one property subtype, this is your predominant property subtype. If this is like lower than that and the split is kind of proportionally between retail and office, you can assign your portfolio as diversified retail office. We do collect this information in RC4 because not all participants might participate in the performance components, where we collect asset level data, and with that we can assign on your behalf your predominant property subtype. So in case you do not participate, like we don't have this predominant property subtype data. So like for the management component benchmark group, this predominant property subtype will be important in order to assign this comparison group for you.
Maybe I can add a bit of a color there. Hi everyone, this is Charles on the line. It is actually worth mentioning once more that when you do participate in the performance component, so when you do report all your assets one by one through the asset level spreadsheet or through the asset portal, we do actually use that granular information for determining your peer group. So we do not look at information in RC4, but some participants, as Victor mentioned, do not report on the performance component, they only report on the management component. It's actually, I think, a minority, about 20 or something, which means that for those participants, we can't, we don't have asset level information for them, but we obviously need to classify them in the peer group so that they can be, benchmarked against their peers, at least for the set of indicators that are included in the management component. So this is why we're asking that question in RC4, that we're also using for participants that report on all components, of course, but just for the set of indicators from the management component. For the main peer group that really looks at the actual portfolio structure, we're going to determine your peer group based on your actual data, assetable data.
Great, thanks, Charles and Victor. So next question is, please explain the detailed split of the scoring system and elaborate further on how the scoring for each section is evaluated. Over to you, Max.
Yes, thanks, Kevin. The answer to this question could be very long and would probably take the entire hour. Therefore, I would like to refer you to answer this question to our scoring document. In the scoring document, we actually show you exactly how we score each and every single indicator. For example, when you have an indicator with certain subsections, we have always certain fractions of points assigned to every single subsection of each indicator. And this is all shown in these scoring documents. Therefore, you can exactly see for which section you would get or receive what fraction of points. We also include where we actually use certain percentages as a multiplier, and also define exactly how we actually create benchmarks, and then how we actually score the performance indicators based on these benchmarks as well. So if you actually need really all scoring advice or want to understand our scoring system, this document is perfectly fine for you. But if you have like more specific questions to a certain indicator and how this then refers to your entity, we're always more than happy to answer your questions by email.
Great, thanks, Max. And I think another good resource for everyone on the line to be aware of is the 2021 Real Estate Indicator Summary document. So this is like a 2-3 pager that basically spells out each of the indicators line by line. It gives like a high level overview of what the indicator is asking. It also gives the points allocated to that indicator, the percentage and the percentage of that indicator within the overall GRESB score. It also includes information like pre-filled and whether evidence is needed. But this is a really nice document that can be circulated, internally to your own teams or for any, solutions providers, consultants on the line. It gives a good overview as to really what GRESB is and the topics that we're asking within the assessment. So yeah, highly recommend anyone to check out the indicator summary, which can be found on the resources tab. Next question for you, Izzy. So can you clarify on tenant area, what defines landlord controlled versus tenant controlled?
Yes, thank you, Kevin. So it's a really good question. So in our asset spreadsheet, we ask you to report on either landlord controlled areas or tenant controlled areas. So landlord controlled areas are those which the landlord is deemed to have operational control. So operational control is defined as having the ability to introduce or implement operating policies, health and safety policies, and or environmental policies. So if the landlord has the ability to do so, then it is considered landlord control. If both the landlord and the tenant have the authority to introduce or implement one of these policies, then we would still consider this as landlord control area. And if one single tenant has the greatest authority, then you would report on tenant controlled.
Perfect. Thanks, Stacey. So the next question is, does GRESB have any recommendations for policy templates to build off of? I think this is for you, Max.
Yes, exactly. Short answer is no, we don't. Because in the end, since we actually validate supporting evidence as well, we always need to be impartial or remain impartial when it comes to templates or overall advice as well. So we are not even giving out any advice how to create your policies, since we are actually in the end the ones who actually need to validate and actually score you based on these documents. However, one advice that I can give you is that there are a lot of especially listed entities, but also non-listed entities sometimes have certain documents on their websites, and you can always draw inspiration from these policy documents or other management documents that other entities actually already provide for you.
Great, thanks, Max. And for the next one, so does GRESB specifically require SASB, GRI, and TCFD alignment, or is it more of a recommendation? Izzy, take it away.
Yes, so short answer to that question, GRESB does not require alignment with these frameworks. However, we do heavily rely on these frameworks and other frameworks when we actually create our own assessment. Nice, easy enough there.
And we do provide within the reference guide specific at the indicator level which alignment standards or various methodologies out there that we align with, even such as building certifications for specific indicators. So you can always see what we're referencing when we ask a question. So the next question is, in the case we have 100% vacancy and no active contract for utilities, should we put 0 in the vacancy column of the asset spreadsheet or leave it blank?
Yes, I can answer this one. So if you have 100% vacancy rate, you should report 100%, 100 only the number. But I guess what this question meant is what is the consumption data that you have to report if you should leave this field empty or report 0. So in case you have any floor area covered by an utility, even though you know that this utility consumption was 0, our asset portal will require that you input at least a number higher than 0. And this is illustrated, for example, in the validation rules of the asset portal. So yes, you need to report 0, even though there was no consumption, and you know there was no consumption for this specific floor area.
Perfect, thank you, Victor. So the next question here. So our question relates to the definition of tenant controlled in the asset spreadsheet. The definition provided in the data dictionary seems to categorize as tenant controlled only for almost only situations where the lease is for commercial activities. Is it possible to better clarify the definition, providing examples of applicability to the residential sector? And then secondly, in the cases of residential use, can we consider the entire building controlled by the tenants when the tenants express their will and choices exclusively through participation in the building meetings? Thanks. Max, take it away.
Yeah, I mean, here it's basically just looking at operational control, not actually looking if a residential tenant has extended meetings. And there's just clearly operational control is when somebody, either the landlord or the tenant, has actually the capacity or capability to impose or implement policies or management styles. So meaning when the landlord is actually capable or has the capacity of introducing certain policies, then an area would be landlord controlled. If, for example, an asset or a tenant has an FRI lease, a full repair and insuring lease, which is quite common in England or Wales, then actually this area would be, the operational control about this asset would be then fully with the tenant, and therefore it would be then tenant controlled. So to really here, question about operational control and who has actually the capacity and capability to implement certain measures and policies.
Charles, go for it.
I can jump in 1 second because there is two sides of that question. Thanks, Max, for the second one. The first one refers to something that I was a bit surprised. So I looked at the actual definition, and I couldn't really find what the attendee was actually referring to in terms of commercial activities in the definition of the tenant control. So maybe what I suggested, we could maybe reach out to that to the person who asked that question offline and make sure that we clarify the definition to her. And if that's actually a mistake in our asset level spreadsheet, well, good spot. Thank you so much, and we will obviously make sure that it's corrected. Thank you.
Nice, thanks, Charles. Okay, moving to the next. So if 5 of our assets are in the same street and share one place for waste containers, hence the amount of waste is one number for all 5 assets, how do we report this in the asset spreadsheet?
Yes. So if you are able to report like each asset level data for waste, meaning that you can split this waste tonnage by each asset, yes, then you should report this waste weights per asset in the asset spreadsheet. However, if the case is you only know the total waste weight and you don't know the specific split between assets, therefore, like you don't track asset level data for waste, and this should be reflected in your data coverage, meaning you would have 0 data coverage for waste.
Mm-hmm.
If I can,
Charles, go for it.
Yeah, there is something also a little bit. There is an alternative actually. In the end, your level of reporting at the asset level is too granular to match your level of granularity of your data. Essentially, your data is too aggregated and not granular enough. So if, for example, these 5 assets, I mean, if you look at the GRESB reference guide, we also refer to the notion of financial assets. So if those 5 assets were to be seen as one financial asset, for example, next to each other, they have the same property type and they have the same function, and they're exactly seen as one financial. Maybe they were bought together and are managed as one financial asset. There's nothing that prevents you from reporting those 5 assets as one, but they have to be seen as one financial asset by the landlord, by the participants. If these are 5 separate assets, especially with 5 different property types, because obviously you want to classify those assets in property types, then it is of course recommended to report as granular as possible, which means 5 different separately, which means that you do not have the asset level information, because asset level information means 5 data points for waste, 1 per asset, and you only have 1 data points. So in the end, you have 2 ways to go about it. You can either adjust your reporting level to the data that you have, or the other way around, but that really imposes condition on the property type and also on the way the participants will consider that asset, whether it's a financial asset or not.
Very clear. Thanks, Charles. Moving to the next one. So for Ra1 risk assessments, there are some assessments that clients see no point in conducting as the results are obvious to them. For example, flooding. They're not going to perform a flooding assessment on assets, or they will perform flooding on assets near oceans or rivers, but it does not make sense on assets on higher ground or slope. In this case, can the client claim the percentage of portfolio covered is 100%, even if they did not do flood assessments on all assets? Victor.
Yes, so the short answer is no, because this would mislead our benchmark values, because it would be claiming that you have performed a risk assessment in your entire portfolio, but when it comes to reality, you haven't, because some asset was obvious that would not be exposed to this risk. But this scenario is already catered for in our indicator, meaning that each risk assessment equals 1/6 of the total points of the indicator, and we have different options for more than 6 risk assessments only. So you do not need to perform all risk assessments in order to score total points in this indicator. Therefore, you need to reflect in your portfolio coverage the real percentage of floor area and the assets that you have performed this risk assessment at the first place. So if you haven't performed this risk assessment in your entire portfolio, you should not claim that your portfolio coverage is 100%.
Yeah, and to add to that, I think there are plenty of places in the assessment where a specific sub-issue may not be applicable to an asset. which is very much why that I think in almost every situation, not every issue needs to be selected to receive maximum points. So let's say there's 12 answer options and you've selected 6. In that one indicator, that may be enough. Another indicator, 8 may be enough. And the scoring document spells this out quite nicely for anyone to reference. So yeah, well, I mean, we need to encourage correct reporting, and correct reporting then can still achieve full points, and even in the case that not all have been performed. And so that is it in terms of the submitted in advance questions. We've got plenty of good questions in the Q&A box, so we're going to move to that section now, and keep submitting them as you come up with them. So with the first one, so will GRESB make any adjustments for 2020 consumption data, as it is likely we'll see significant reduction in consumption? Charles, over to you.
Yeah, happy to take that one. And thanks, Dovidas, for that good question. Well, first of all, you might expect a significant reduction in some property types, but not all. I mean, think about, of course, office or retail, you might expect a reduction, but what about residential? I mean, arguably, people have been staying at home much more. So, the statement of consumption reduction, emission reduction is actually true, but just for a subset of property types. And still, it actually, the extent or the extent to which COVID-19 this year has impacted those property types differ across countries as well. So that's something that we've obviously discussed at length with our governing groups, advisory board and benchmark committees of the GRESB of the GRESB real estate assessments. And it was concluded that we would not make any adjustments in the GRESB real estate assessment to cater for those changes, simply because we do want to reflect those changes in the assessments. We have no intention to adjust the actual data, because we're an actual reporting tool, and our reporting tool should be showing the actual data consumption. However, what we don't want to end up with is benchmarking values that have been, let's say, excluded, or let's say exclude values that have been, exclude values from the benchmark that are actually genuine values. Let's say in the case of an office asset, you would witness an energy reduction of, let's say, minus 50%. In a normal circumstance, that data point would be rejected from the benchmark because it's seen as an abnormal value. In the context of COVID, it is something that is actually much more plausible, which is why what we do intend to do after the reporting period is that, and that's we're going to do that for all property types and all sectors and all countries. And we will actually look at the data reported this year, and we'll be looking at whether how we should adjust the outlier thresholds values that our system uses in order to accept or reject data points from the benchmark calculation. So this has no impact on participants' submissions, because we're only going to affect what's included in the benchmark, not in your own assessment. So don't worry, it will have no impact on your score or on your benchmark report. But we do intend to make sure that the benchmark are being fed with genuine values, which will be amended right after submission once we have all the data in the system. I think that also addresses the second point, the third question, sorry, from the Q&A box from Anke. Maybe on that one, I'm going to refer you to 2 places to read what we actually communicated about 2 months ago on those intentions. Please refer to the Appendix 1 of the reference guide. There is an introduction there where we talk about the impact of COVID and the discussion we had with the governing groups on COVID and what's our intention on our side. There is also a COVID-19 specific paragraph in the introduction of the reference guide that talk about the same thing. So if you open the reference guide and you make a search for COVID-19, you'll undoubtedly end up on that paragraph. Thanks.
Nice, thanks, Charles. And the next question from Beatrice. So for you, Max, so do you suggest to indicate the joint ventures that are less than 25% in the asset spreadsheet?
Yes, this is actually something I forgot to say earlier in the first presentation. If you have a stake less than 25% in an asset, it is completely up to you as a participant whether you want to report on it or not. However, if you elect to report on it, then the same rules would apply, meaning you would need to report on the entire floor area and the entire performance data. However, this is really not mandatory and completely up to you and to your choosing.
Perfect. Yeah, and then we do have the percentage of ownership column in the asset spreadsheet that is optional, which you could use to indicate your percentage of ownership in the asset. Okay, I think we can go to the next question. So for you, Victor, so if the entity fund is part of a larger parent organization, is it appropriate to leverage firm-wide policies that would be inherent to the entity for things like employee engagement or governance policies?
Yes, yeah, this is a good question. It is appropriate as long as the policy is like directed and it's implemented within your fund, your entity. If your parent company has a policy that is also applicable to your entity and to your products, meaning your assets, yes, this is appropriate. But like, let's remember that for some of these indicators, for example, policies, we do require evidence, and this evidence would need to be in line with that. It needs to like assure to us that this policy is applicable to the entity and not only for the parent organization that owns this entity.
Yeah, so like Victor said, there are plenty of, I think there's 17 or 18 evidence-based indicators in the assessment that all go through a validation process. And in the case that it's not clear that the fund relates to the parent organization because of various reasons, I mean, there's some situations where even the names don't necessarily align. It's always best practice to explicitly address whether this is in the document as a PDF, on corporate letterhead, or within the open text box where you upload the evidence in the assessment portal, that this policy specifically applies to the policy provided explicitly applies to the reporting entity that you're submitting. So next question. So will RM5 to 6.4 be scored this year? And as a reminder, what RM5 to 6.4 are the newly integrated resilience indicators. So in years past, we had 3 years of the resilience module. This year, we have taken and kind of adapted those indicators to be even more in line with the recommendations of the TCFD. And these are indicators that are part of the assessment. And align, of course, with the TCFD splitting between transition and physical risk. And Victor, I'll just go ahead and answer it. So they're not scored this year. So, I mean, our intention is to, for this year, to at least evaluate what the responses look like as they are completely new and new structures, so that, in future years, we can begin to score those. I would pay close attention to these indicators as the other answers and the open text boxes. So basically where you're providing additional information about your risk management processes. These do go through a validation process. They won't affect the score, but they will, they're validated. So it's best to pay attention to the requirements for the open text boxes. And evidence is optional to provide to these. Of course, entities can elect to share that evidence with investors. So if your investors are expecting to have access to the risk management policies or some of the risk assessments you've done in the portfolio, please feel free to provide that, but that does not go through a validation process. The next question. So if the asset spreadsheet, in the asset spreadsheet, what if we do not have all the data for a tenant controlled area?
Yes,
Victor, for you.
Yeah, this is a good one. And this is actually like the instance that participants do not have 100% data coverage on an asset, for example. So if you don't have the data, or if this data is unknown for you, this should be reflected in a floor area coverage field, meaning your data coverage. If this is a data point that you don't know, in the end, you don't have data coverage for it. So this should be reflected in the data coverage. And we do have some examples on how to report this instance in the asset spreadsheet in the instructions tab. So it's very clear and detailed. So yeah, you just go there and you're going to have all the answers.
Thank you, Victor. And off to the next question. So what is the difference between common areas and shared services? For you, Max?
Yes. Common areas are generally like all these areas within an asset that are not tenant spaces, which makes kind of sense. So for example, when you imagine like an office building, common areas could be like the lobby, hallways that are shared by multiple tenants, also elevators. Shared services, however, are then general like larger energy sources or services that are shared by multiple tenants or in multiple floor areas. For example, it could be here a central ventilation system that in an office building that is shared by multiple tenants as well. but it's still like landlord controlled. Therefore, the shared services space could also like be larger than only the common areas, because it could actually include some tenant spaces, or actually all tenant spaces as well.
Nice, clear. Thank you, Max. And the next one I think is for you as well. So from Sarah Hickman, can you elaborate on scoring for building certifications? Does it benefit portfolios to double dip into example well and fit well, or does that just become redundant?
Yes, for building certifications, we actually calculate a coverage percentage per certification system, and then actually calculate a sum of all coverage percentages. And this is then actually the percentage that we benchmark against your peers. Therefore, when you have multiple certifications with a certain coverage percentage, these are then all summed up and capped at 100% to then be actually benchmarked. And therefore, when you have multiple certifications, please report on them for sure.
Yeah, and then a good note for this is, for example, if you have a single asset portfolio or even two assets, in that, and both assets have LEED certifications on the full floor area. If you, in addition to that, have well or fit well or BREEAM for some reason, then it's capped at 100%. So it does become redundant once the portfolio coverage is past 100%. And we do have a specific example. I mean, to talk about scoring of building certifications or really any of the the aggregated scores, it can be quite difficult, especially to convey even verbally. So we do have a built-out example of how exactly it's scored with multiple property types, different certifications, and the different validation statuses associated with those. So we're happy to share that if you're interested. Next question also from Sarah. So following up on the references requirements, I'm assuming this is the same for CDP.
Yes, I guess this is the same as with the alignment question, as you answered earlier already. So like we don't require any alignment with any other body, however, or framework. However, we also always draw inspiration from like other bodies in our assessment creation. And for example, in Appendix 8 of our reference guide, we will find also like 4 different gap analyses. And an 8C is actually a gap analysis between our 2021 assessment and the 2021 CDP questionnaire. And they can see exactly our alignment with the CDP from this year as well.
Perfect, thank you, Max. Next question is, if a residential property was under construction for half of 2020 and the other half it was operated, how do we correctly report that? What would that be weighted in the calculation of utility consumption and GHG emissions?
Yes, so in the reporting characteristics tab of our asset spreadsheet, we do have a column for you to specify the status of the asset throughout the reporting year. So if it was under new construction for half of it, you need to report this asset as new construction, and then specify that this new construction finished by mid 2020. So by mid 2020, our asset portal will expect for you to report performance data for the period that you were that your asset was a development asset. You don't need to report performance data. So this now links to the second question, like how this will be weighted in the calculation of GHG emissions. So we collect data coverage in both area and time dimension. And as we only expect performance data for the part of for the period that your asset was operational, then you should reflect that that availability that you have for this asset was only for the period that this asset was operational. This will be reflected and weighted in a data coverage, meaning if you have data for the whole period that your asset was operational, and also you have your full floor area covered, so yeah, you will have 100% data coverage regardless of the period that your asset was operational or not.
Perfect, thank you, Victor. So the next one, so regarding RP1, so this is basically your ESG disclosures and annual report, sustainability report. So are reports published in 2021 accepted if the reporting period is 2020? For you, Charles.
Yeah, sure. The answer is short, is yes, you can. I mean, reports published in 2021 will be accepted for this year's assessment, as long as they relate to the reporting period of 2020, which corresponds to your GRESB reporting period, which is going to be 2020. It will be accepted by our validation team.
Yeah, correct. So this is the correct interpretation of our reporting requirements. We do have different reporting requirements for a standalone sustainability report, which can be referencing 2020 reporting period or 2019. And in the case of an integrated report, we accept 2020, 2019, and 2018. So highly recommend you to check out the validation requirements section of RP1. And in addition, for any validation questions, we do have built out validation sections in the reference guide that are very helpful and are very prescriptive about what's required from a validation perspective.
Maybe it's worth skipping the next question for now, just because the question after is actually probably from the same person and is exactly related to the same indicator, RP1,
okay.
And ask whether the reporting can be made at group and entity level to be leveraging on the maximum score of the indicator. The answer is, it depends on, you can actually report multiple pieces of reporting. Let's say you have an annual report and an integrated report and a report to your investors, then you can report all of them. You do not need to select all options to reach maximum amount of points. So that's the way the indicator was designed. We do not require participants to select every single checkbox to reach maximum points, because essentially it would require participants to have one annual report, one sustainability report, one integrated report that would be above the requirements of the GRESB assessments. However, if you do have the same nature of the piece of disclosure, let's say you have two annual reports, one at the group level and one at the entity level, then you're not allowed to leverage on both pieces of reporting to account for your scoring. However, keep in mind that you do not need to tick every single tick box to reach maximum amount of points. So I would simply recommend you to have a look at the scoring document, to make sure that based on what you do disclose, what is the expected number of points you can expect from indicator RP1.
Nice, thanks, Charles. So the next question, Victor will answer. So in terms of risk assessments, in the example provided in the earlier slide, the operator decided not to do a flood assessment because the property was not near water. Does the act of reviewing the geographical positioning and determining that flooding is not a risk not count as a risk assessment? Does something count as a risk assessment only if there's an external review involved?
Yeah, so this is a good question. So a risk assessment is like a careful examination of potential risks that your asset is exposed to. Performing a risk assessment and deeming a risk not material for your asset is different than just assume that this risk is not material for your asset. In the case of flooding, it might be a little bit more obvious than other risks, but not necessarily because it's not close to water. What about rain? How is your location prepared, like the place your asset is located, prepared to support like heavy rain, or this will flood? So like you need to carefully evaluate all the factors that will deem that your asset is exposed to this risk or not. If this evaluation is based on geographical positioning and like what is the risk of flooding in this specific location, this counts as a risk assessment. But this is different than just considering we don't have water close to our asset, then this risk is not material. It might not be material, yes, but you haven't performed a risk assessment only by this consideration. And just as a side note, like our risk assessment does not need to be externally reviewed.
Perfect. Yeah, very clear, Victor. So the next question from Sandy. So apologies for such a basic question, and I will go ahead and admit this is not a basic question, so I think it's very relevant. Going back to reporting boundaries. So do we include performance data for properties we have owned for 24 months as of December 31st, 2020, i.e. would we exclude acquisitions that occurred in 2019 and 2020 since we don't have 2 years worth of data? For you, Max.
Yes, this is against our reporting scope requirement that you need to report on your whole portfolio. This means that you need to report on all the assets that were part of your portfolio at any point within the reporting period. Meaning if you report on calendar year, this would mean at any point during 2020, or if you report on the fiscal year, any other time, for example, April 2020 till March 2021. And it doesn't really matter if you have 2 years full of data for it. You should only report the data that you actually have for it. For example, if you acquire an asset mid of 2020, you should definitely, you will have to report the data from this point on, for example, for July till December. But however, if you actually get your hands on the data of the prior periods as well, we are more than happy if you report this as well, because this actually could then make you eligible for like-for-like considerations as well, when you have actually 24 months of data in the end to report to us.
Yeah, perfect. So yeah, in summary, any asset that was owned within the 12-month period as identified, I believe it's RC2 or RC3. I should feel bad, I don't remember that. But yeah, as defined as whether it's calendar year or reporting year, referring to 12 months. So the next question from Shayna. So is it still the entity's discretion whether they will report under the equity, financial control, or operational control approach for the reporting boundary? Or does GRESB recommend using the operational control reporting boundary because this most closely aligns with the definition of landlord versus tenant controlled areas? To you, Charles.
Yeah, great. Thanks, Kevin. That's an excellent question. To provide a bit of context, up until 2019, GRESB participants were actually still allowed to report to GRESB at the portfolio level, which means that they were reporting on aggregated metrics, not at the asset level. In 2020, for the first time, so last year, for GRESB 2020, covering 2019 reporting year, we introduced mandatory asset level reporting, which means that all participants had to report every single asset one by one through the asset spreadsheet or the GRESB portal. In the context of that change, we actually aligned the GRESB assessment to the operational boundary approach. And that was the only way for us to actually ensure a fair scoring and benchmarking. Because if we were to keep participants, you know, to let the choice to the participants to report on whatever approach they saw fits, it could have meant that we would have benchmarked, say, tenant consumption data related to Scope 3 emissions with tenant consumption data relating to Scope 3 emissions under the financial control approach, which means that that was really the only way to make sure that the benchmarking and scoring that comes out of our system is fair. However, I want to point out that going forward, as we're working on the, you know, the kind of a bigger picture, the assessment development roadmap for the next years, it is definitely something that we're looking into, you know, going back into ensuring that we do align with any approach suggested by the GHG protocol, so that the benchmarking would be happening, you know, before any scope classification would occur on our platform. Thanks.
Very clear. Thanks, Charles. So the next one. So if this is your first year of submitting to GRESB and you don't have prior year data, how will this impact your score? Victor, give it a shot.
Yes, so in every assessment for the asset level data, performance data, we collect not only the current year performance data, which means 2020, but also the last year, in this case, 2019. So if you are reporting for the first time, you will be required to report to us both years consumption. So this should not be a problem. But like if you don't have the last year consumption, then yes, this would be reflected on your data coverage for the last year consumption, but this will only impact your scoring when it comes to like for like, because that's where we track improvements over year. But it's important to remember that our assessment looks at the current reporting year only, meaning for 2021, we only like scoring metrics such as data coverage, renewable energy, for example, for the year of 2020. We are not looking 2020 to 2019. 2019 is just for the sake of like tracking improvements over year.
Great. Thank you, Victor. Yeah, the next one also for you, Victor. So back to the question between common area and shared services data. As an example, in a residential building, if we have data for base building electricity, for example, including shared services, electricity, and electricity used to light hallways, but have no way to differentiate between the two, where would that data be reported? In this instance, shared services data would be inclusive of common area data.
So yeah, this is a very good question, and we get this question very often. So we have the field for shared services for you to report any consumption data that you could not split between common areas and tenant spaces. So if you could not split this consumption, you will report this at chat on the shared services. So yes, shared services is inclusive of common area data.
Jump in 1 second. Just it actually leads to another issue. Then is if you, let's say, report all that consumption to the shared services box, what happens to the common area box? In essence, you know the amount of electricity covering your common areas. You just don't have the split, and it's already reported in the shared services. What essentially you need to report on is you should assume that you have full data coverage in your common areas, but that the consumption value is 0. And that's because the consumption value is already reported in the shared services, but that if you were to report 0% data coverage in the common areas, you would essentially be penalized for something that you do know, which would not be fair, of course. So in that case, don't forget, please report everything that you have in the shared services, because that covers the tenant space as well as the common areas, but make sure that you report full data coverage, or at least the equivalent data coverage in the common areas. That's the one that you have in the shared services, so that you're not being penalized by a low data coverage that in that case would not apply.
Perfect. Next question, which I think is great and very relevant. So if we have conducted a climate risk assessment for our assets, which includes flooding from water source precipitation as an evaluated risk, would this be accepted in GRESB?
Yes, so this comes to a point like you have evaluated this risk for precipitation and water source. So in this case, yes, you have performed a risk assessment for flooding. So yeah, it would be accepted.
Yeah, I mean, this is best practice. This is what should happen when you're evaluating climate risk. The next question. So the assessment reference guide lists out all indicators that are subject to manual validation, which suggests that any indicator not included is not manually validated. However, does GRESB do random audits, reviews of indicators not included in that list, sort of like what is being done for reporting boundaries? Max, you can take that, and then I can add some context at the end.
So sure. In the end, we do not do any random checks here, and we completely rely here on the integrity of actually our participants. Why we do this is mainly because, first of all, also like reporting burden decrease, because when we would actually require evidence on every single indicator, it was massively increase the reporting burden on our participants overall, and also the workload on our validation side. Therefore, we just have like certain mandatory indicators, but do not do like this for every single indicator. No.
Mm-hmm. Yeah, so we used to do this where we did ask for evidence for many indicators in the assessment, but a lot of times that was not reviewed, and was only reviewed in like 5% of situations. It was called the validation interview process. We have since replaced that with the reporting boundaries review. It's essentially been replaced. And then I'm seeing that we're almost at time. So assets sold during 2020 need to be included in the assessment together with consumption data. Victor, do you want to answer that quickly?
Yes, so like if you held an asset in 2020, it falls into the reporting boundaries that like requirements, and therefore you need to report it. So you will need to report the consumption data for as long as you had this asset on your portfolio. So like, and you're going to define that by your ownership period that you have sold this asset and whenever during the year, and this will also be reflecting your data availability. But yes, you are expected to report performance data for assets that you held at any time and it was operational in the portfolio in 2020.
Perfect, thanks. And Charles, it looks like you'll answer the last one about basically implementing a tool after the end of the reporting period, and would they be able to respond to Ra1 with this?
Sure. Well, great that you implemented this tool to track the climate change in the first place, climate risk in the first place. So well done for that. Given that the GRESB assessment this year, covers the ESG performance of 2020, I can confirm that since that tool was not put in place in 2020, the resulting GRESB score should not be incorporating the existence of this tool last year. However, keep that in mind that next year, the GRESB 2022 assessment will be covering reporting period 2021, where you'll obviously be able to leverage on that new that great effort. Nice.
And then I'll answer the last one from Beatrice. So do you do any checks on the bills afterwards? We have access to bills on landlord controlled areas, but not tenant. The bills, utility bills are not part of the evidence that's required to submit to us. So the performance data is self-reported, and much of that goes through a third-party review process, whether that goes through verification or assurance, or through consultants or solution providers. So no, this is not relevant to provide to us. And with that, we're at time. I will quickly run through my last couple of slides. Just a reminder of the assessment resources we have available to you at documents.gresb.com. Yeah, and then reminder to check the new resources we had that Victor took us through earlier. We also have the online training platform that has some introductory videos and some quite specific videos around asset level reporting and such. So highly recommend you guys to check out our online training platform. And then lastly, I'm sure many of you are aware of this. This is how you interact directly with the team you've been speaking to today. So that's gresb.com/contact, and we do get back to you typically within 2 business days. We also understand that how busy this time of the year is, so we try to get back to you. So we're not holding up any submissions. And lastly, yeah, thank you to everyone for joining. Thanks to the real estate team for having a nice dynamic session with me. So hope everyone has a great rest of their day. Good luck with the rest of GRESB reporting, and happy to help in any way we can. Yeah, have a good day, everyone.
Thank you, everyone.
Thank you,
Bye.
everyone.
Everybody, bye.